Today, folks, we're taking a look at the sea of red. Is this the stock market crash everyone's been calling for? The correction that has been coming out of the words of Cathie Wood, financial education, Jeremy from YouTube here. Everyone has been stating stack cash and get ready for the drop. Now, we don't know what the markets are going to do. We're going to take a quick scheme through here because we've been getting nothing but good news. The Federal Reserve, more stimulus checks. They just did stress tests on the banks, and the banks are now allowed to do share buybacks. We're going to go over all of this news, but just taking a look at my general watch list today, guys, everything is red. We got Tesla trading down 5.4%. All of my tech. I don't know why Microsoft is in the green as the making of this video, but just take a look at it, guys. We got RioCan, GEO Group, REITs getting slaughtered, consumer staples, your sin stocks, McDonald's, all of it, guys, just getting clobbered. And what I hate the most is every time I look at this, I'm like, I hope it drops more, and it usually never does. So this might be your buying opportunity to start dipping your toes in, because oh my God, we got a lot to go over on this bittersweet Monday. I can't predict what the markets are going to do, but you can predict how my YouTube channel does by simply hitting that like button. But nonetheless, let's jump right into this. Welcome back, passive income investors alike. And to kick this off, let's talk about the best news that hit me the hardest, which was the stress test coming out of the Federal Reserve on the U.S. banks. And I keep telling you guys, banks are banks are banks. You gotta buy them. They were the best buying opportunity over the last 3 to 6 months here. And now we're starting to see the recovery with Goldman Sachs trading up 6.2%, Bank of America trading up 2.16%, JP Morgan up 4.14%. And heck, let's just listen to the quick CNBC article that kind of sums all of this up.
Fed chose to do an unprecedented second round of stress tests this year due to the economic uncertainty surrounding the pandemic. This time, they ran two hypothetical scenarios, one with a severe shock and a quick recovery, another with a more moderate decline, but a prolonged recovery thereafter. Now, the projected losses for the 33 banks studied under both scenarios surpassed $600 billion, more than the June test, the Fed said, but the firms maintained enough of a cushion to maintain their minimum risk-based capital requirements.
So it's a beautiful day, guys, when the banks can start doing share buybacks. They can reintroduce some of their dividends perhaps down the road here. It shows a bit of a light at the end of the tunnel with all the unemployment going on and the fact that the stimulus is coming out again here, guys. I still see it as a fairly good buying opportunity because they haven't fully rebounded yet, and that's what we're probably going to likely see over the next 6 to 12 months. But even with all of this incredible news around the banks, it doesn't look like it's enough to help out the stock market today, considering even the stimulus news, when we heard of this last time, the markets exploded. This time, however, the markets really don't seem to care, guys. But this probably couldn't have come at a better time leading into the holiday season. And I'm not the stimulus god. I know me, Kevin, loves talking about the stimulus checks here on YouTube, but I'll play a little bit of a news article here as well that you can take a quick listen to.
Well, I think, as you know, the good news is this is a very, very fast way of getting money into the economy. And again, let me emphasize that people are going to see this money the beginning of next week. So it's very fast. It's money that gets recirculated in the economy. So people go out and spend this money, and that helps small business, and that helps getting more people back to work. Now, you're right. The good news is unemployment has come way down. We were worried about, something like a Great Depression again earlier in the year. But this is now much more targeted. I expect it's needed in a short period of time, and I think this will take us through the recovery.
How do the people and the small businesses actually get this money? Is it the same system as last time? And what do you do about the ones that didn't make it? Secretary Mnuchin, a lot of them just didn't make it to now.
Well, you're right. That is unfortunate, and we've said our job is not done until we get everybody back to work, and that's what this is about. It is a similar distribution as last time for the PPP. There'll be some additional programs also set up that are targeted. Let me just say, in the PPP, if businesses are down 25%, they'll be able to get a second check. We also added employer retention tax credits. Up to $10,000 per quarter per person. This is a very, very big incentive for small business as well. And I expect this is going to have a much-needed big impact.
Putting the stimulus news aside, guys, let's just talk about the state of the overall economy because nobody knows what's going on here. And just taking a look at the CV virus, which is running rampant here in Canada, it's still running rampant in the US, and we're going to head into a dark winter here as they predicted, guys. We got Trump leaving, Biden's going to come in, and he's obviously going to lock down the state, try and get some more control over this, which again, it's nice that they're introducing the stimulus now, but something tells me all these stories of these small businesses that are having a lot of hard time are going to continue to have a hard time to the point where they're going to end up shutting down because they're just not going to be opening the economy up until we get a widespread vaccine available, which I have some kind of predictions surrounding the vaccine right now. And my prediction with the vaccine is the time horizon is going to get crunched down because a lot of people are saying that they're not going to fully get everybody vaccinated until next September, but I am blown away that I know 3 people that are frontline workers that have already gotten the vaccine, which is a good sign for the rest of us that, you know, they are pumping this stuff out, and we're kind of in this weird kind of limbo state right now. But up in Canada, the Great White North, guys, they are locking us down. Yep, Ontario will enter a province-wide lockdown as of Christmas Eve, sources say here, guys. They're coming out today. They're going to be announcing all of this stuff. The sources say that it's going to begin at 12:01 a.m. on December 24th and will last for 28 days in the southern portions of the province. Staggering, but not unexpected. I mean, many of us were prepping for this, guys, is basically the COVID cases get out of control here in Canada, the fact that the hospitals are starting to reach their stress limits, and the government finally stood up and said, look, we tried. And I don't know if this kind of news is what's segregating the market to the downside, because we know when we go into lockdowns, guys, it doesn't do good for the economy at all. And it's weird to me how the markets are responding differently this time than they did to basically this time in March, because usually when this stuff comes around, we're going to see an exacerbation again in the tech stocks, which is why I'm not selling any of my tech companies, because again, when everybody's on lockdown, I'm telling you, gangbuster earnings. We're going to see this out of Apple. We're going to see this out of Facebook. We're going to see this out of Microsoft and Zoom and all these companies, Shopify, guys. These are the companies right now that I would be buying more aggressively. Facebook's been my favorite here, but the fact that they are selling off on leading into this news that we know is expected to be more shutdowns, these are just the companies that are going to win through this, guys. So I would be picking up the dips we're seeing today, if I'm being honest. But with the rest of the market, I'm going to play it a little bit more cautiously. I wouldn't mind picking up the banks here because we know they're going to be doing just fine. But in the same notion, guys, with everything else, we're only seeing like a mild correction. It would be really nice to see a full-on 10% dip in the overall markets. But we're just going to sit tight. We're going to play this out and hopefully enjoy the holidays. I got a lot of content coming out. We're also going to be giving away $500 to one of our lucky subscribers. Not on this channel, unfortunately. You got to come over to our live stream channel over at the Passive Income Educator, where we're going to be live Christmas bloody day, guys, this Friday at 10 p.m. That's when we're going to give the $500 away. You can come hang out, join the festivity, the investing community over there. But in light of all this, stay cool, stay awesome, and I look forward to catching you tomorrow.